$300 dip, but the $100,000 mission is still alive. My real account slipped from about Canadian 39,600 to 39,300 this week. And I will show you why I am not panicking. We will cover my positions, a quick SPY trend check, and a simple breakdown of the Palantir latest earnings results, plus what it means for my watch list. So here's the plan today. We are going to look into the portfolio update, the $100,000 challenge, the commodities, dollar, and the rates, what has changed this week, and the top 3 overnight stories that I think are going to most likely move the market, and show you on TradingView some technicals on SPY, which is an exchange traded fund that tracks the S&P 500, and go into the results of Palantir that were released this week, and share with you my plan for next week. Now, before we get started, markets involve risk. Do your own research. Consult a licensed financial professional before deciding to invest your money. So let's do this real quick. We dipped from 39,600 to 39,300 in the portfolio. The road to 100,000 is not a straight line for sure. And I want to show you the journey exactly as it happens. Since inception, the account that I show you guys has been going up. It's now up 82.93% with 17,816 Canadian as profit to date. That's a marathon result, not a sprint. I still hold my January 2028 lips in Arch Aviation and Grab. I still have higher conviction, long dated bets in these stocks because I'm using lips. I can still participate in the upside if it happens while keeping the defined risk premium upfront, and I'm less exposed to the near-term noise. The reason why most people lose money using options is that they take short-dated options and they get killed by the decay. So for me, taking the long-dated lips, it means even if the stock pulls back in the short term, I still have time for the option to play out. But again, I will assess risk as I go. After 45 days, if I see that the trade is not moving my way, or even earlier, I am very happy to take losses and move on. Losses are part of the trading game. Now, moving on to the rates, let's start with the 10-year treasury yield, which is around 4.12%. Lower yields from recent highs often support equities because discount rates ease. Also, the US dollar index, which I like to look at because it tracks the US dollar performance relative to a basket of other currencies globally. It is up slightly by 0.01%. So a strong dollar can be a headwind for risk assets and US multinationals. So it tightens financial conditions globally. Crude oil has softened. The West Texas Intermediary has been trading at $59.78 when I checked this, which is minus 1.29% drop from the trading price of yesterday. So this reflects a risk-off week and a firmer US dollar. For viewers in emerging markets like Zimbabwe, cheaper oil can relieve some cost pressure. Now yields are easing. Tailwind, dollar is firming. Headwind, oil is down. So this mixed signal shows that demand expectations have cooled. So moving on to the 3 overnight macro stories and why you should care. Valuation worries hit AI-linked tech. When multiples stretch, small disappointments can cause big market drops. So such volatility is good for me as an options trader, but they can take a hit on accounts, mine included. The strong dollar, it means that fewer people are expecting the Fed to obviously reduce rates in their December meeting, but anything can happen. So that can cause some volatility. Oil and commodities slammed on risk of equities sold off yesterday. The S&P 500 dropped, and I was watching it and seeing a lot of tech names like Meta, Palantir dropping. I like to look at the long-term perspective and reevaluate situations as they happen. Now, I like to look at what's happening from the policy side of things. US tariff power face a Supreme Court test. Outcomes that increase uncertainty can push rates for the US dollar up and equities down, especially trade exposed techs, semis, retail. Think of Apple or other companies that have links to China or other countries that may be affected by the decision to strike off tariffs or even to keep them in place. Now, looking at the European Union Central Bank, they did keep the interest rates at 2% with limited guidance, signaling easing cycle. Why is this important? A firmer euro can tag on the US dollar and nudge global rate expectation. People with money, they are always looking at opportunities. So if there are opportunities in the euro market, they tend to go there. If there are opportunities in Asia, so this is something to keep an eye on. The US shutdown is now at day 36. The prolonged physical uncertainty, in my view, weighs down on the confidence and can tighten funding sentiment. But still, equities have really rallied to just ignore this move. But if it continues, my translation is that more policy noise might cause more volatility. So plan for whipsaws. In other words, ups and downs. Now, my macro risk map is that if jobs data is soft, expect the risk of defensives and quality checks usually hold up. If jobs data is strong, expect risk on cyclicals. For the US dollar, strong data might imply that the US dollar and yields, they might go up. Soft data, the US dollar might drop on growth worries. So I like to keep things very simple. I like a very simple playbook tied to data, beats or misses. I don't want to overcomplicate things. So let's dive into the quick technical analysis of the SPY. I'm going to show you the trading view chart. So SPY is one exchange traded fund that I like to look at. It tracks the S&P 500, which is a basket of 500 companies that are publicly listed in the US. It basically mimics the S&P 500 index. So if I look at this, what I see is that there's an uptrend, right? As long as the market is above this moving average, in this case, this is an uptrend because you see that even though it's still lower than where it was, it is still above this line. I'm not really worried. So it means there was a health pullback, which is something that is very important. But notice that for those who want to invest for the long term, SPY has been, it usually it goes up and down. And I like to look at those sectors that are currently affected by the pullbacks to then say those companies that are in those that are discounted, those are the ones that I look at. But for me, the key level is the 50-day moving average, which for me, I think is the first support for buyers who often defend it for the uptrends. Now, this is just probability, not certainty. So I use levels only to plan entries and exits and not to predict the future. It's very important to understand that it's extremely difficult, if not impossible, to actually predict the future direction of the stocks with 100% confidence. Now, let's dive into the stock of the moment, which has been really going up. Palantir. What they reported is that the earnings was up 63% year on year to about 1.1 billion. US commercial was up 121% year on year, and the adjusted earnings per share was 0.21%. So this was a bit, but also cash and short-term treasuries were 6.4 billion. The recorded deal activity across 1 million, 5 million, 10 million plus tires, it was a record, in fact. So what does this mean? For me, I like to see that the cash was climbing towards 6.4 billion, so they have a strong balance sheet. In terms of the long debt, that's something that I look at, it's zero. So not many companies actually that are listed in the US have zero debt. So that means for me, the risk of them actually going bankrupt is almost very small. Now, I also like to look at the adjusted free cash flows. It went up 46% to 539 1,862,000. This is a real firepower for growth and research and development. So why are bulls excited? Bulls are those who believe that the market is going to go up. In this case, this stock is going to go up. For me, two interesting things. Two engines are firing. One, government, stick contracts, long sales cycles, and high switching costs. Two, US commercial is growing fast thanks to the AI platform turning messy data into decisions. So that's where the hyper growth scaling potentially comes from. That's a better move to say that if their free cash flows for Palantir continue to grow, let's say from 6 billion, 10 billion, this might potentially become a $1 trillion company. Again, it's just speculation, but what I like is that Alec Klepp, the CEO, is implementing and is delivering. But I think still I'm concerned about the valuation. I like to look at stocks that are undervalued and that are cheap. That's what I want to do. Or in some cases, if it goes back and I want to get in, I will probably consider an aggressive cash put, and then I get high premium to lower my cost basis on the pullback. So my stance is I'm still bullish on the business long term, but I respect the price. Great company is not always a great buy at any price. So bear that in mind. I'm still gonna keep it on my watch list, but for beginners, you can still admire fundamentals but still wait for either a good technical setup or valuation to cool relative to growth. That's not fear, it's called discipline. So let's move on to my plan for the week. My plan for the week is that I want to stay on course. I'm gonna keep holding Grab and Archer. Apparently, Archer, they are gonna be reporting earnings today. By the time you see this video, they will probably have reported earnings. So with earnings, things can go either way. Even if there is a beat or probably a miss, the stock can still go either direction. So I'm looking at the long term. Now, for me, the macro triggers are job data and policy headlines, tariffs, shutdown. I will be very flexible in looking at those in my risk map. For Palantir, I will keep it on the watch list. If growth outpaces valuation, then maybe the chart might offer a low risk entry, or I'll consider cash secured puts like I indicated. Until then, patience is very key. None of this is advice. It's my process. Define risk, wait for your pitch, and execute with rules. So let's talk about the quick education here. 3 rules I use on a red day. Position size beats bravado. Small enough to survive, big enough to matter. That's my mantra. For me, I want levels over feelings. Late moving averages and prior highs or lows, let's say 52-week low or 52-week high. Those are my guides for me. When a stock hits the 52-week low and the fundamental story of the business has not changed, I get so excited. So that's it for this week. But if you want to see me hit the $100,000 mark, please subscribe, hit that like button, and turn on notifications so that you don't miss these videos when I post this weekly. And if you want to learn more about the strategies that I share and deploy in my own portfolios, make sure that you book a one-on-one coaching session on www.streetwiseeconomics.com. I go deeper into analyzing these businesses. So follow me on social media for daily clips and chat notes, and drop a comment. What are your biggest questions this week? I will feature the best ones in the next episode. I'm Isaac, a Zimbabwean-Canadian economist. Markets will zigzag, discipline smoothens the ride. Make sure you trade and invest wisely. I will see you on Saturday on the next video. May the markets be on your side, and see you in the markets again. Bye-bye.